Hello, today is Tuesday, the 6th of January, 2009, and this is Brian Shannon from alphatrends.net. We had a little bit further strength here today. The NASDAQ was up 1%, gaining 31 cents. And you can see we had a little bit heavier volume here today as the market remains above this recent level of resistance and also above that 50-day moving average. I still think that, when you look at a 10-minute time frame, we're obviously pretty far extended here recently. We've been riding this real steep trend line, and the gains seem to be coming, not as easy. Although there's still a lot of opportunity in the speculative area, some of the January effect stocks. This morning I had posted 8 of them. The average stock on that list, take a look at these things. The average stock on that list was up 14.5% today. I had posted these to alphatrends.net before the open, and hopefully, again, the point is I'm not making recommendations. I'm just showing you where there's opportunity. People email me and say, well, how did you trade them? That's not the point. The point is, again, how do you trade them? I'm just showing you the opportunity. Hopefully you're taking advantage of it. So the market is remains in a strong uptrend here, short term and intermediate term. We've got that rising 5-day moving average, so we still want to give the benefit of the doubt to the buyers, but obviously not blindly so, because the longer term trends on the daily time for weekly time frame really are continuing lower. The daily is really a lot more neutral than it's been, and that's a good sign. This is decline. This looks more like accumulation. I still don't trust it because we're so badly damaged here on the weekly time frame. But when you look again at that 10-minute time frame, again we've got this real nice pattern here of higher highs and higher lows. I tried shorting the quid, or buying the quid, shorting the Qs in here today. It just didn't have it. I was clearly early. I got out very quickly as well. But there's really no sense in shorting during this type of uptrend unless you're doing it on a 1-minute time frame, and that's what I was looking at. But basically, you look here at this 1-minute time frame. It was a pretty choppy session today. It's closed below the daily VWAP. As far as the 2-day, we found support at the 2-day VWAP in here. So the market remains in an uptrend, but it's extended here, short term over the last 5-6 sessions. So you've got to be very careful when you see stocks on these little penny stocks moving in average on a basket of 8 of them, 14.5% in one day. It tells you that there's a lot of speculative fever in the market, and that a lot of times that comes near a turning point. So you've got to be very careful. Oil continued higher for most of the day, but did close with a nickel loss here on the USO. And in here we were looking at the again the definition of uptrend, higher highs and higher lows. I think right now basically stops probably for any remaining long positions ought to be under this $37 level. Not that we're going to come in real hard, but we've got now a lower high, it looks like. If that's confirmed with a lower low, then perhaps we get this market to come down to the 5-day moving average and find support. That might be near about $35. You could also take a look in this oil market at Fibonacci from these lows to this high. That 38.2% retracement would be coincident with this $35 level. We back up that this time frame to now the 30-minute, and you can see in here for oil that what was I trying to look at? Here's where that 35 level is, right around in here. So that's still pretty far away, and maybe it meets that 5-day moving average up in that 35 and a half level. So oil's gotten very extended very quickly. It remains in a primary downtrend below a declining 50-day moving average. Volume is diminishing in here, so just reasons to be concerned, not necessarily to liquidate those long positions yet, although I think if you've been holding it, that it makes sense to sell at least partial positions up in here. The semiconductors, we were looking at this group. I was thinking that maybe we would get a pullback before breaking past this cup and handle, but instead we saw this market gap a little bit higher this morning and then continue to run basically for the entire session here. Finished a little bit off the highs, but very bullish action in the semiconductors today as it again broke past that this was the Fibonacci retracement from the election highs. So we take a look in there. That was at 61.8% retracement level. It made it past that level, and the what's been defining this cup and handle that we've been seeing develop here. So we had these higher lows, and we had less time in between the tests of resistance. That wore the sellers out. Buyers finally took control in here today on this time frame, where they had already been obviously in control on this 10-minute time frame, when we've had this 5-day moving average advancing, giving us encouraging signs, further encouraging signs, the higher highs and higher lows. So now if you're long the semiconductors, I think that the worst case stops at this point ought to be down near about $18.65 or so. And as far as continued upside, where does this market have the potential to go to? Well, we're right here at this point, and then I think just above that you've got the about 19.5. All of these markets are getting a little bit further extended each day. It's good to see the nice volume increase in the semiconductors, but again, with weekly time frames as damaged as we are in here, you've still got to be careful. Perhaps we run up towards that 100-day moving average right up in there. We'll see what happens, but for now the job is to manage risk. If you're long from good lower prices, just keep raising your stop up according to what the market action tells you, which is, again, based on the definition of trend, higher highs and higher lows. As long as it continues to hold on to these higher lows, then then you can continue to hold. But I think that you want to sell into some of this strength here when you get such a quick move, such a sharp and quick move. The financials still battling with this declining 50-day moving average. They've been the real laggard in this market recently, and really pretty much the messiest group. When you look at these charts, we'd seen this trend line is broken. We've got some support right in here at about this 12.20 or so, and then below that was the level it broke out from at $11.90. I think both those levels are probably still important, but actually before that we have this $12.40. Breaking there leads us down to, these are our potential levels of support. But it looks like we're just getting sideways consolidation for now. It's tempting to look and think that they're up too much short term, but really, when the market starts turning sideways like this, it's hard to do. But you want to just really be a little bit more patient, sit on the sidelines, wait for maybe a pullback to come, and then see how the market recovers from there. When the market's this badly damaged, we can go either way right now. To make a big bet after a counter trend rally like we've seen like this just doesn't make any sense at this point. The S&P 500 again remains above this 92 level, and the longer we remain above it, the more important that becomes. We had seen it resistance for quite a while. We're starting to see these moving averages kind of come together in the shape that we want to see, that is the 10 above the 20 above the 50. We're not quite there yet. You can see that blue line is the 20, it's above the 10, but basically we're there. We've got them all rising. The 50-day moving average is kind of flattened out. This level is going to be very important to hold going forward over the next several weeks, and again, I think you could even give it down to about $91 a share. We have a rising 5-day moving average, so we want to be cautiously optimistic in here. We've got this widely watched 92 level, but a lot of times they'll shake them out just below that 92 level, just to get the weak holders out, to maybe lure some more shorts in if this rally is going to continue. And again, we can take a look at markets like the Mexican market and see that this market has been kind of maybe leading the way here. Same with the FXI. A lot of people have been hating the XFI, but it continues to rally. So we still see encouraging signs. There's still a lot of good stocks, a lot of opportunity out there. The name of the game is always manage risk.